Welcome, everyone. Welcome to the market close. Well, golly, it has been, an exciting start to the week. I suppose you could call it exciting if you're looking for buying opportunities. There's been no shortage of that. And I have to say, my I'm not effing leaving coffee is empty, but I'm keeping it here for moral support because the diamond hands need a little bit of love. There we go. The diamond hands need a little bit of love right now because they get a little sore. Oh dear. Okay, go ahead. Let's jump on over to what the heck is going on in stocks as we close out the day here, folks. Volatility is up 10% today. We are not at 21 yet. We're at 20.78 on volatility, but we're definitely substantially up on volatility. People are pretty much freaking out because of this hedge fund meltdown that we've had. The fact that a fund got margin, and I'm highly oversimplifying here. We'll do a more detailed video later, but the fact that a fund got margin called that didn't end up having the money to cover their margin, leading to losses at Credit Suisse, immaterial losses at Goldman Sachs, but larger losses at Credit Suisse and some other institutions. Big problem. It basically leads the entire industry to kind of start going, oh man, is this something we gotta be worried about? Nobody wants to be worried. And worry leads to, unfortunately, more worry, more fear, which more worry, more fear leads to more selling off, which just leads to more worry, more fear. That's, after all, the way market crashes happen. Fear compounds upon fear. Now, hopefully, look, the reality is the Suez Canal is free. Inflation expectations, our next CPI data release comes out April 13th. Unemployment numbers come out on Friday, even though the market's going to be closed. Expectations are very positive for the economy. Yeah, do we expect short-term inflation? No doubt. But, in the meantime, we've got some pretty solid volatility going on. Let's take a look at the losers of the day. Let's start here and then kind of try to understand what's going on. We have not fallen down to those low levels that we have seen about 24 days ago now. 20 to 24 days ago now is when we really hit sort of that bottom. It somewhat feels like we're doing almost that kind of double dip that we had back in March and April of 2020, where we had our March 23rd low, and then we sort of double dip down around April 3rd, which was much more condensed, much closer together. Here we did have a green week approximately in between these this sort of W, but we'll see. Now we're really waiting for it. Where's that upper side of the V? We'll see. Given the fact that EXPI is down 10% for absolutely no reason at all. Same with API, Plug Power, Penn Gaming down 7.8%. You start getting a little concerned that, first of all, the good news is it's not the stock you picked. It's kind of everything, especially within these sectors. But it also does make you question, like, okay, where's that bottom? We shall see. Anywho, Moderna also down 7.6%. Upstart rotated from a positive today to a negative 6.8%. That's rough. Look at that. We went all the way up to an all-time high here of 156, only to sell down to 132 here on Upstart. We've also got Upwork down at just $41 a share at Upwork, well off those highs that we saw in February after their earnings at $63. We got Nano Dimension down at $8. I mean, I made my deep dive analysis video on this back when it was like $6. Jeez, it's kind of heading back to the dumps here. Not Carnival. It's Churchill Capital. Look at that, just like implosion there on Churchill Capital's pricing. But really, it's been the entire vehicle market, and it's creating, especially if you have cash available, it's creating these amazing opportunities to jump in. But it's painful because you jump in and then it's like, oh, sweet, I got some record lows here, and then it just keeps going down. So the rule there, by the way, if you're feeling nervous at all, is just keep trying to nibble a little bit. Like, okay, can I get another $100 from somewhere and put another $100 into the fire pit because it makes you feel a little bit better. Get yourself a coffee that doesn't have to be anything else in it. There could be, but don't worry about it. We got stocks to look at. Yeah, everything's normal here. Canoe down, oh my gosh, down 1170. Geez, look at this. Keep in mind, it did go down to about 968 there for a moment. Let's take a listen here before we keep going through these reds here. Let's take a quick listen over here And give me 1 second here to
there
fix
is a
something.
possibility we see
inflation.
a real surge in inflation. He goes on to say that there's a much higher chance that this inflation becomes, quote, permanent and structural. More of a chance of that happening than at any other time over the past 12 years. Michael, I'll go to you on this one first. I mean, we've been having this debate for weeks, if not months now, about inflation. And certainly we've had a number of companies come out in their earnings, for example, in recent days and talk about higher input costs and talk about the fact that they're going to realize higher prices.
That's hilarious that they have the Citadel guy talking about higher inflation. Does anybody trust that guy?
Could it actually be something that takes root and becomes, heaven forbid, a runaway situation?
Yeah, so that's the multi-trillion-dollar question. And right now, everybody seems to be worried about inflation. There isn't an investor that you speak to that's not asking whether or not this is temporary or structural. And I would just...
I'm not asking that.
Time that everybody saw the big risk coming. Usually, risk comes from things that we're not paying attention to. So, for example, Morgan, this morning I went down to feed my dog for breakfast, and she...
Okay, I don't care about the dog story, bro. So, look, one thing I do want to mention here really quick is look at Apple. Thank you, whoever just brought that up in the comments. But I was saying Apple, and Amazon as a cash park. Look at them, folks. Even though the other things are bleeding, Amazon and Apple sitting flat. And that's what's so interesting about these guys being cash plays. Like, if you're trying to be invested, but also like reduce your margin risk, in some sense, you can almost kind of park your money at Apple and Amazon is kind of what it's felt like. No guarantees going forward, right? But that would reduce your margin percentage outstanding while at the same time investing. Now, you might not get that upside. Excuse me, on what you might see with like a Tesla or some of these others, which have sold off like a third, right? But that stability is there. It's really incredible. Just how much they really anchored to these positions. This lemonade's down at $83, pretty dang low here, or getting close to our $80 buy under range. Snowflake almost went under a 200, which was crazy because when it IPO'd, it flew right past. And I'd always thought this should be under $100 or under $200. We almost got there. It would just be my buying opportunity. Ubiquity trying to recover here in the day. Looks like, sorry, hold on. Wait. We get to the minute chart. There we go. Okay, yeah. Recovering within the day here, up from 369 to 376. Square 206, getting close to that $200 break. Etsy's been pretty stable. I mean, you got to hand it to Etsy. Even though it's been up or down, it's just always around $200. Just always floating around there. Looks like Beyond Meat has turned negative. It's down at 127, almost at that 120 buy target for me. Tesla at 609. A nice little bargain there. Peloton at 105. Pretty stable, actually, right? Friday it was like a 103, 102, 103, 104. Now sitting around 105. Did go as high as about 107, 108 this morning. Did come down a little bit again intraday here. Apple now flat. Now, in terms of green, we had a big old green day there at Rocket Mortgage being up about 10%, but that vanished. That disappeared real fast. So then we've got, let's see here, Dominoes. Dominoes actually green a little bit today. Makes you wonder if Dominoes is sort of coming back a little bit because of COVID concerns. Let's see here. Okay, sorry, 1 second here. And yeah, so that I mean, but then again, it's barely up. Like this is barely moving, right? You can't really define a 0.25% move here. Pinterest under 70. That's where I like picking up Pinterest under 70. FRX, it's incredible how close to $10 this is. It's just kind of like laughable at this point. I mean, look, and I own it, right? But it's just so cheap. Cos, was supposed to have a good strong run of a day today here. Went all the way up to about 23% up, but really everything is just getting weighed down by the toxicity of this market. It's pretty incredible. Let's take a peek at, for example, at NIO and Tesla. The EVs are the ones just getting battered. NIO is actually recovering here into the close, and that's good. I mean, NIO is just horribly oversold. Let's go back here. Let's see here. If I go to Let me go to an interval of a week here. Let's go all the way out to a week. So on a week interval, which takes us way far back into like 2019, we're at an RSI of about 41. If I go to a day, we're at about 34. If I go to the hour chart, which really only doesn't take us back as far. That doesn't show as much. Yeah, an our chart's a little complicated. I'm big on either day or minute, so we'll focus on this here. Okay, so what do we have here? This is the 1 minute chart, and we are rallying somewhat into the close here. We'll see how this ends up closing. See, is that true for the others as well? It's not true for Tesla. Not true for the others. Okay, let's take a peek over here. We'll circle back to the sticks right before the close here. We'll see what happens, but let's listen in here for a moment.
That's a digital coin that is pegged to the US dollar and uses the Ethereum blockchain. Shares of Visa are higher, while competitors MasterCard and American Express are both down more than 1% on the session. Bitcoin jumping today as well. That is up more than 3%. Mike, just want to get your response to this. I mean, we are seeing more and more, I guess, use cases, or at least companies making moves to adopt or take on more crypto possibilities.
Yeah, so Visa supports 160 currencies around the globe. So I think this makes a lot of sense that they're getting into crypto among the other institutional names that we've seen doing this. So if you have consumers that have these stable coins in their wallet, rather than converting it to dollars, then converting it and going there, this just makes the whole transaction process that much more seamless. So I think this is a natural fit.
We have 90 seconds left of the session, and we have slipped a little bit over the course of the last 20 minutes or so. We are now down by 10 basis points on the S&P, so not on track for a record close.
Yeah, not on track for a record close. Jeez, man. Geez, this is. I mean, it is interesting. I'll tell you. When you look at the indexes, the overall the indices are fine. Like, you're not seeing a 7% sell-off on a day at the indices, right? And that's really because you've got these massive anchors like the Apple and Amazon sitting pretty. You've got some green at some stocks. BFT, remember, has the CNBC chat coming up very soon. So when BFT PaySafe here goes on CNBC, I expect this to pump in the after hours, and then it could even dump. It's not uncommon for it to deflate after the pump, but just be aware of that in the after hours trading, which if you want the after hours trading, sign up for Webull with metkevin.com/Webull, deposit $100. You get 2 totally free stocks, worth up to $1,850. But ChargePoint was up higher as well today, and it's also kind of sold down a bit. Alibaba, ChargePoint, Fannie Mae, Facebook, these guys up about 2 and a bit. Let's listen to the closing bell here.
VIX up a bit above 20.8.
Another bloody end.
Gold and silver both down today, down about 1% or so. The US dollar up 0.2%. At the close, S&P 500 down a fraction. The Dow enough for a record closing high once again with a 0.25% of gains of 79 points, though off the high, which is 186 points. The Nasdaq down 0.7%, and the Russell 2000 down close to 3%, 2.8%.
Welcome to Closing Bell. I'm Morgan Brennan in for Sarah Eisen, along with Wilfred Frost. As you can see, as the markets begin to settle here on the heels of that closing bell, we basically finished near the lows of the session. I think for most of the major averages, save the Dow. Looks like we did actually get a record close for the Dow. The Dow finished up 0.3% or 99 points, though that is well off the high. You heard Wilf just say that. The S&P, on the other hand, did close slightly negative, though right near the flat line. 39.71 is your level there. The Nasdaq underperforming, down about 0.6%, and the Russell 2000, the small cap, snapping a 2-day win streak as well, down nearly 3%, 2.8% there. Coming up, former SEC Chairman Harvey Pitt on the fallout from the Archegos margin call and whether new regulations are needed to ensure that this won't happen again. Jim LeCamp from Morgan Stanley Wealth Management and Michael Batnick from Ritholtz Wealth Management.
Let's go ahead and jump on over to see the sticks ourselves as they do their introductions on CNBC for the people that they would be chatting with. Let's go ahead and see, how did things end? NAT 12%, SunPower 11%, geez, EXPI 10%, and this is pretty bloody. Look at this, Agora almost 10%, Microvision almost 10%, Plug Power almost 10%. I mean, it's just over and over and over again. We've got Penn National Gaming trying to rally again here in the after hours on Penn, but really by less than 1%, so not much of a dramatic recovery there. Gevo up 1%, but also down about 6.77%. Let's see, like, why Enphase would be bad, would be down 6.5%. Nobody knows. It's just literally just the market being a big old weenie baby. That is all it is. The market being weenie babies. All right, one sec. Let me make a little note here. There we go. Okay, fix that. So, yeah. And really, you get the market being weenie babies when they're too high on margin. You know, the market and these hedge funds, they don't have a rule like Kevin does that says don't exceed 6 months of your pay in margin or 20% margin. Don't exceed those levels. Instead, you have these hedgies that are like 100% leverage. And so, of course, they panic when these rotations happen because they have to. They're going to get screwed otherwise. They have to play the market every day because they're at the brink of bankruptcy every single day. And then when trades don't go right, oh, no surprise, there's no freaking collateral left. It's just the ultra competitiveness of Wall Street that is leading to these disastrous sell-offs here. And really, it's a reward for anybody who's got cash over. Or, hey, every one of your paydays when we're in these environments is to me, it's a treat. So you take your payday and you turn it into some cheap stock. And all you have to do is pick where you think the most pain is and where you think the most recovery is possible. Like, for example, my strategy, and it is one that is painful, sure, but my strategy has not been buying Apple that has been stuck at 120, consistently stuck at 120. Instead, it's been buying the companies that are selling off, you know, whether that's the Tesla, the NIO, the CCIV, the Palantir, the EXPI, the Redfins, whatever. These are companies that I see a very strong future in, and hey, for me, they're just a discount. Now, of course, you always want to balance out margin, so make sure that you're not getting yourself too exposed to potential margin risks. Very, very important. Let's just go ahead and sort by after hours here and see what kind of ups and downs we've got in after hours. Interesting, we've actually got a 4% bump here at the cannabis ETF. Sometimes these ETFs, though, they could be a little funny after the fact. Somebody says, look at Voyager. What's up with Voyager? Let's see, Voyager Digital. I got to move them over to the other chart here. I don't know why we don't. Here, let's just put them in over here. Voyager Digital. Voyager Digital. Ah, there we go. It's because they're not starred. Oh, Voyager Digital did a nice 8%, 8.9% today. I spoke with the CEO of Voyager twice. Steve, great guy. Honestly, great guy. Like if you listen to the interviews, just type into YouTube, Meet Kevin Voyager. You listen to those interviews, you like, I don't know, you just like melt, and he makes you invest. I don't know if it's kind of like the Peter Rawlinson effect over at Lucid, where they just melt you into whatever you say. But yeah, it's incredible. Also incredible that we have now broached 21 on the volatility index. We are now up 11.45%. Free Mind here says Tesla is being pumped up by people on Robinhood and Stash. Then those same retailers will dump the stock. I think, are you saying if? Because if then, that would make sense. Yeah, I mean, well, does Go EV report earnings today? Oh, that's cool. Okay, I mean, I don't expect them to actually have earnings because they're barely manufacturing their vehicles. But yeah, I'm happy to pull that up in just a sec. Let's pop on over here. Let's see what they're talking about here.
By the end of the year. But I don't think that level of rates is really problematic for the equity market. So I think a lot of this...
Yeah, full disclaimer on Voyager. So you can... I'm an affiliate there. So if you sign up there, you go to metkevin.com/Voyager. They give you $25 for free. I also own some of the shares there.
The sell-off also that we've seen over the last few weeks seems that it is not fundamentally driven. So some of the energy equities still look attractive as well. So there's going to be a rise in yields, but I do think that we've seen a lot of the big move behind us. And I don't see a level of rates that's going to be overall problematic for the equity markets. We look out 6 to 12 months.
I'm curious. Right. I mean, you mentioned Joyce.
I mean, I agree with that. You look out 6 to 12 months. I don't think we're going to see this madness anymore.
Just what does that imply in terms of the trajectory of the U.S. dollar as well?
Well, you know, you've had that Europe really had lagged here because they had a second wave, a third wave in some cases. But we have news now that the vaccine deliveries are set to triple. So you could see Europe really go through a double-digit rebound in the coming quarter. And that region could look much less fragile by the summertime. We've also had weakness in the Asian equity markets as well. And I think that you could be nearing the end to some of that. So some of these EM sectors, which have reopenings that are sort of lagging what we've seen in the developed markets, really could see some momentum coming into the summer months.
Let's now get to Leslie Picker for another sort of update on the latest details of the margin call incident at Archegos Capital and the ripple effect it's had on
once a decade margin call.
Quite the ripple effect indeed, Will. Phil Huang was practically an unknown entity up until this weekend or so. Now his what could be seen as reckless risk tolerance has caught the ire of regulators and counterparties and may be partially responsible for billions of dollars in losses at several large banks. Huang is the face behind Archegos Capital Management. It's not a hedge fund, but a family office, one that is said to have taken an exorbitant amount of leverage, concentration, and liquidity risk. When the market turned against him, he faced a multitude of margin calls, causing the banks to sell his assets in a variety of names, including Viacom CBS and Discovery and a group of Chinese technology companies, guys.
Wow.
Leslie, thanks so much for that. Stick around for the conversation. Michael, my broad first question is, what level of concern all of this gives you that there's just a lot of leverage out there across all stocks to the upside that we could see?
That's Leslie Picker, for those of you wondering.
Common Discovery type set of stocks and see them collapse as quickly as they had from their recent highs.
Yeah, it's never good to see a company of that size fall with that magnitude so quickly. But I would say that if there were other shoes to drop, if there was going to be a domino-like effect, I think we probably would have seen it already. So the story was that they were using these equity swaps. And to be honest, these CFDs, which are called contract for difference, I guess that was on CFA level 6, because I had never even heard of that before. So this is some really esoteric stuff. And I think the story is still being written. And we're going to find out in the coming days and weeks what's really going on.
Jim,
Oh. What happened to the CNBC?
Reddit trade, GameStop, etc. These different instances where we've had stock charts that have gone parabolic for different reasons, and you've seen unwinds. I just wonder, do you step back from this and say there's in general right now? Maybe
it sounds like the suits are now pissed off with CNBC, and we're actually losing our feed to the suits over here. So we do have an earnings release from Canoe, which is Go EV. We're not actually expecting earnings from this company, given that, well, I mean, the company doesn't make money. Okay, so let's see what they say. Recent business highlights. They completed their SPAC. They unveiled their electric multi-purpose delivery vehicle to be priced at $33,000. Blah, blah, blah. In 2020, they built 32 vehicles, including 13 drivable prototypes, now conducting validation and real-world endurance testing. That's kind of what Lucid is doing as well, by the way. To date, conducted over 70 simulated and physical crash tests. What crash tests? What's a simulated crash test? Like on a computer? What? Who cares? Crash the car. Cash and equivalents of $702 million as of December 1. Nowhere near the pocketbooks that Lucid has, for example. But that's okay. Smaller company here. GAAP net losses of $90 million compared to the quarter, which were less than the losses of $182 from the prior year. Let's see here. Okay. Net cash used in operation of $107.1 million compared to 100. Okay, whatever. Roughly the same. Capital expenditures. They actually spent only $7.6 million in capital expenditures compared to $22.1 in the prior year, which makes you wonder if are they reducing their R&D expenses or what? And then they have a conference call scheduled. I mean, there are really no earnings to speak of here, right? Let's see. I'll look at the balance sheets or rather the earnings, the cash flow statements and that. Let's see here. Okay, so we've got the balance sheet. Yeah, the $702 million in cash is way up from the $29 million in cash that they had. This is Go EV, Canoe. Then at let me actually put that up here really quick. So there we go, Go EV. Yeah, we're all looking at just Kevin right now. Yeah, I'm just reading this boring sheet off. There's really nothing to see there. 17 million in liabilities versus 2 million in liabilities last year. And let's see, that's okay. Revenue, no revenue. No revenue. Research and development, yeah, zero revenue as we expected. So it's not really an earnings statement. It's like a financial statement release. But anyway, research and development costs went up to, is that million? Yeah, 90 million in the last quarter in R&D compared to 28 million last year. So they plowed a ton of their R&D or money from the SPAC. I mean, proportionally it's small, but they plowed a bunch of money into R&D after their SPAC. Good for them. Let's see how they're doing in the after hours here. So let's go ahead and pull the screen up again. So let's go pull GoEV and see how they're doing. They're actually up 2% in after hours. I wouldn't be surprised if they're up because people are excited about the what's it called? The research and development expense. But then again, I mean, 1.69%, even though the stick looks high, this is not, there we go, 2%. Okay. Yeah. I mean, cool. I mean, sometimes these companies report earnings and it just brings them back on the map. All right, let's listen to Leslie again.
Benefit from squeezing the shorts on the upside as well. So we've seen kind of parallels on that front as well this year.
Guys, we'll leave it all there. Thank you very much, Jim LeCamp, Michael Batnick, Joyce Young, and our Leslie Picker. And also Sam DeLoyer, who's been outstanding with her puns on the lower thirds for a long time. I did not get that one. Arch no. Maybe you can explain later. Anyway, 99% outstanding. Up next, Canaccord's Tony Dwyer on his recent downgrade of financials.
All right, let's jump on over.
Now we're starting to see those fundamentals catch up.
I love that you talked about earnings. I steal this from Dave Wilson in his chart of the day, where he says analyst earnings estimates are up almost 7%, one of the highest quarters that we've seen now going back since at least 2004. We're coming up on the end of the quarter in March. How are you thinking about the fundamentals and earnings?
I think, honestly, analysts are still too pessimistic. When you look at things like retail sales, 8% above former peak, capital goods orders from the industrial space also up nearly 10% beyond former pre-COVID peak levels. And you see analyst forecasts for S&P 5 revenues just barely matching former peak. It would say to me that analysts are probably still a little bit too cautious and still a little bit too pessimistic. They've started to do a lot of catch up in 2021, but frankly, they've been catching up for a long period of time. I think they've still got more to go because we've just got another fiscal package. We just got a whole another load of cash dumped upon U.S. households. They've still got a tremendous amount of savings and they're already spending. So to me, there's a lot more upside still to the earnings estimate revisions. Our bull case has earnings growing closer to 35% in 2021, and analysts are currently forecasting about 28%. So I would say that there's still more upside if we continue to see this economic momentum build.
I'm curious if you just
talk. Let's go ahead and hold with this momentum talk here. So I'll just mute this for a second. Let's jump on over to the sticks. Let's just see what's going on here in the after hours. So we got actually Aptiv running. We've also got Canoe running here. Canoe, not right. I can't really call it a run at 2.5% after earnings. It really just brings attention to them again here. Let's see here. We've got Virgin Galactic up about 0.6%, Shift up 0.6%. We've got Tattooed Chef up 0.6%. This is all in the after hours here. Churchill going a little green in the after hours. All right, let's see here. We have DocuSign at 196, under 200 here. Look at this, a little fall here in the after hours. Dropped about $1 here in the after hours, 0.7%. Fell pretty quickly there. We've got FRX right back down about 0.5%, giving up its days of gains here. API falling some more along with Matterport, C3AI. JP Morgan, barely falls over here. Tesla pretty flat in the after hours. And let's see. All right, so we're pretty comfortable here. No big movements here. We've got Dave & Buster's popping up a little bit and Canoe popping up. But beyond these guys, things are pretty flat in the after hours here. Let's listen in again over to CNBC. Let's see if they've got any interesting commentary we could respond to.
I'm not a trader. I'm the worst trader. What I'm pretty good at is that risk reward. And what we found, Wilfred, was that the rise in the 10-year note yield on the 10-day rate of change or 10-week rate of change had gotten so extreme, that most extreme in history. And when that's happened in the past, it's led to a period of lower relative performance. Not a crushing, not that banks get blasted, not a bear market, just that they have lesser relative outperformance. If you remember last summertime when, I was hoping.
Basically saying when we see this sudden rise in bonds, it's not uncommon to see stocks return a little less money in the period thereafter.
Since then are the financials and industrials, and just given that rise in the 10-year, I think history suggests that you just want to take a little bit off the table for now.
So the fact that, Tony, we're expecting President Biden to unveil this multi-trillion-dollar infrastructure package later this week, and then next month, another spending package in the trillions potentially as well. What does that do to this entire discussion to continue to see, I guess, more stimulus in some form or fashion potentially poised to go out into the market?
How about J-Pow?
It's a great question, Morgan. There's 3 levels of stimulus. Everybody knows the 2 of them. They know the monetary, obviously the Fed. They know the fiscal stimulus, obviously these packages we're talking about. But they don't talk about the interest rate stimulus. And the interest rate stimulus is the lower yield on corporate debt, and household debt allows for increased spending. But this blew me away today. Ned Davis sent a chart out that showed that the U.S. is lagging at 25%. Fiscal stimulus relative to GDP is lagging behind Germany, France, and especially Japan.
That actually shows you how ridiculous it is. That even though we spent so much money, we still spent less than Europe.
Done. What happens where you want to be really negative and bearish is when you have a need for money to grow and limited or no access to it. Even with the higher rates, we have a historic level of excess liquidity. So you get these gyrations. Every second year, it was 2004 after the 2003 recovery. It was first half of 2010 after the 2009 recovery. You get this choppiness around interest rates where you don't have to just make a trade on the next 10 minutes, especially given some of the stuff in the background over the last couple of days.
Overall, though, Tony, what about positioning? What about things like the VIX? Are you keeping an eye on those, and do they suggest being cautious in the short term or bullish?
I'm going to break the cardinal rule here, Wilfred. No idea. Everything that I have tactically is basically neutral. I like to attack the market when you're in a fundamentally strong backdrop, like I described earlier, and you get oversold in an uptrend. So you combine the tactical stuff with a real conviction in my core fundamental thesis. The VIX at 20-ish, the percentage of stocks above their moving average in a neutral territory, the National Association of Active Independent Managers, neutral exposure, and their exposure index. There's nothing that's really compelling. I'd rather wait, especially in an environment where liquidity is all over the place in the last couple of weeks. I'd rather attack it when I have a better pitch. I just don't see that pitch right now, but it's coming again. You don't want to be historically negative. Even if it's a 10% drop, you want to buy weakness when you have money availability and excess liquidity.
Okay, I'm a little torn on what to think of this guy because some of the things he says I think are great. Like what he just said, you want to buy weakness. I couldn't agree more. I think that's brilliant. Yeah, you should buy weakness. But then when they're like, okay, well, what are you doing? What's your thing? They're like, oh, I'm neutral. I'm just hanging out. So you ain't doing anything because you're pissing your pants is what you're saying. maybe that's too hard.
It's those kind of moves. Listen, if you're looking out 6, 12 to 24 months, I don't see any issue. We are in the beginning of a synchronized global recovery. It's going to be choppy. There's going to be periods where interest rates make it feel weird, currency gyrations, all the funny stuff we love to write and talk about.
This guy's talking out of both ends of his mouth, though. How are we at the beginning of a synchronized recovery that's choppy? Definitionally, if there was a synchronized swim going on, but it was choppy, then it wouldn't be a synchronized swim. You're not at the beginning of anything synchronized. These people are brilliant at making you feel good, but literally saying nothing. Take a freaking stand and whatever.
Yeah. Find out which stocks are going to be in that portfolio later on Closing Bell.
ARK X launching tomorrow. Another ETF. I don't know. Not loving ETFs right now. I like picking the crop that's on fire. Let's go see if we can see some more stuff that's fire. What I should make? We should just have a crap pie. Basically it's like an M1 Finance pie of all of the stocks that suck right now and all of the stocks that have sucked for the last 30 days. That's the fund you need. You need a fund that literally just buys all of the stuff that has sold off more than 15 to 20% in the last 30 days. And you just you just put money into that all the time because it's literally the buy the dipper ETF. That's what you need. And it's just always the most painful, but ends up having the best return. I mean, who knows if it actually would have the best returns, but it'd be funny if it did. Anywho, so, okay, yeah, I mean, after hours here, I mean, nothing's really moving in the after hours, I'd say. It's kind of a dogs ETF. Yeah, just, right. Buy the dogs, fire, except it's like the fire. I don't know. I like dogs is pretty good. Yeah. Okay, all right, let's go here. I don't know. Is there anything else going on here? I don't know. This is boring. There's nothing going on in the after hours. Redfin's up 2%. That's cool, but I don't really care. I mean, there's no news here. There's no drama. Give me some news. What do we? Let's see. Maybe Kudlow actually has news for us on Fox Business.
And a $3 or $4 trillion tax hike. What do you think?
Well, I think that the good thing for Biden is he did start with a big fortune, and he's going to whittle it down. You and I covered Latin America together for a while, and I stayed there because
Definitely talking about politics. I gave him a chance. You know, I try to be balanced. I try to give him a chance. Just you got to flip over just to try. And nope. Big old nope. All right, let's go look at the news that the suits are reading, okay? Let's see what the news is that the suits are reading. Wells Fargo set to execute 4 block trades worth $2 billion. The Suez Canal reopens. New York expands COVID vaccine eligibility. Big deal. Democrats urge capital gains tax at death. $1 million exemption. Wow, that would kill the stepped up tax bases. Viacom CBS skeptics see prospect of more pain after 55% drop. Jeez. All right. There's no real crazy news right now. Let's see what they're saying.
$6 trillion around the world, some of them bigger than hedge funds, but they don't have nearly the same oversight. And that's because as part of the Dodd-Frank legislation, family offices won a special carve-out from Congress that allows them to avoid any SEC registration as long as they serve a single family and they don't give investment advice. Now, family offices made the case to Congress at the time that they only make conservative investments to preserve family wealth, and they don't try to beat the markets. Now, Archegos did not make a single filing with the SEC throughout its entire history, despite placing those billions of dollars in bets. Now, some family offices are required to disclose their share filings through 13Fs to the SEC, but that is only if they own more than $100 million in stocks. And attorneys tell me that rule is not always either understood or followed, which, Wilf, would be a generous explanation for why Archegos made these huge bets without anyone knowing about them.
It would, but I would also say that whilst I totally agree with the gist of what you're saying, and that seems like their behavior was as aggressive as it could come, and it was only meant to be long-term preservation of wealth. But the other key point there is, as long as it's the family's own money and they're not giving anyone else investment advice, those are probably two more powerful and important factors which do apply here and do explain why it could be understandable why they should face lower levels of regulation than a financial advisor or a typical hedge fund.
True, but if you look at how family offices have grown up, both in terms of size and sophistication, if part of the role of the SEC and the government is to understand systemic risk.
But I'm going to pause there for a second. It is interesting to me what they're talking about. They're basically saying, there's so many loopholes for these companies to not report the crazy trades they're making. It doesn't surprise me. Okay, what's Bloomberg talking about here? Talking about Bitcoin 2021 akin to 2013
story,
and 17.
or is this a broader crypto underneath, outside Bitcoin, Ethereum, you name it, all the other little players?
I'm glad you brought that up because it's definitely a Bitcoin play. It's definitely Ethereum. And the whole space is going up, but it's very speculative. There's 9,000 cryptocurrencies. I mean, it's just too easy. It rules economics. There's going to be a washout at some point. The significance is the most widely traded cryptocurrency on the planet is the digital version of the dollar. Tether trades more volume than Bitcoin. People need to understand that it's Tether, it's the digital dollar that's taking over. So Chinese are trying to launch a CBDC. They're just trying to catch up to this organically developed on a global basis demand for trading dollars in terms of digital form.
When does the U.S., in terms of, I mean, the U.S. government catch up, if at all? I mean, there's been this concern here that, you know, you're not really seeing the regulations loosen enough to provide ETFs and other sort of trading vehicles. The idea that maybe the U.S. is kind of behind the curve compared to other nations out there.
Well, I think ETFs in the U.S. is a matter of time. That's being priced in the market now. It's Canada's done it. We have a change in.
Oh, really? You guys comparing them to Lex Luthor?
The thing is, the U.S. is already ahead of the game in terms of digital dollars. All they have to do is put on proper regulation on these digital versions of the dollar, like they do to the banks, we do to primary dealers. We don't have to create our own CBDC, which is ideal from a privacy standpoint. So let's look at the Chinese yuan as a CBDC. It allows that dictatorship authoritarian government to track every single transaction of all their citizens. The U.S., we can't do that. So we're already ahead of the game. It's just how we regulate is the next key step.
Who do we hire to unlock the password? Romaine has Bitcoin. It's stuck there. He can't unlock it. Who do we hire?
Well, that's a key thing about the security of the space. That's part of the issues. It makes great headlines. But it's a unique thing about people like me. I've never held physical gold, but I've had exposure all the time through ETFs.
I'm sorry.
It's Mocha Bear 2016.
It was great to have you. Mike McGlone of Bloomberg Intelligence. Huge markets next.
All right. Okay, that was interesting. Kind of fascinating. Let's talk about Tether and why this is potentially leading China to really want to catch up with these central bank digital currencies. Makes sense because, I mean, think about it. If China's got a digital currency and everybody's using that, you know, China's able to track you much better that way. Way easier to track people with a digital currency. Jeez. All right, let's see more of this debacle.
Some massive moves, 2-3 day moves in certain stocks, but we haven't seen it infect the broader market so far, at least.
Yeah, I think what you're seeing here is somebody who was, as it turns out, making very poorly timed bets, but his transactions were actually propping up the market for the securities in which he was investing. And one individual, and certainly one individual in a family office, should not have that kind of ability to affect the markets for these securities.
So Harvey, I mean, we're just talking about this with Robert Frank. I mean, can the argument be made, and I realize this could be a one-off situation, but can the argument be made that there is essentially the shadow hedge fund system operating out there? Family offices, I realize, not necessarily hedge funds, but that not only needs closer scrutiny, but potentially could create or could lead to other situations, risky situations that are out there in the market, given the conversations we're having about low interest rates and all the liquidity, et cetera.
I understand the argument, but I always think there's a risk of trying to conclude too much from what is a very specific fact pattern. At the moment, we have somebody who should not have even been classified as a family office, in my opinion, because he started out in a very different situation from those that the family office rules were intended to protect. And as a result, it seems to me, the first step is to deal with the kinds of circumstances we're facing here.
All right, this is going to get into like regulation talk. It's a little rough here to weed through. So instead, let's take another quick look at the day here, really just to see the fallout of the day today. I mean, look, Voyager's up 10%, which is awesome. You know, I've got a chunk of funds over here. I haven't made my high conviction video on it yet, with the exception of with course members. We talked about this a lot, but yeah, I mean, that's nice, but it's just a nice little offset to some of the other madness that's going on in the market. I mean, we do have some green here. Look at this, Bitcoin actually at 57,000 right now. Really incredible. Really shows that low correlation with tech, even though people generally associate Bitcoin with tech. We have a relatively low correlation to tech. In fact, I did a video the other day on the specific correlation. I think, what was it, like 0.8 8 or something like that. It was relatively low, especially when you compared it to the Dow, which I know isn't exactly tech, more industrials. But yeah, the Bitcoin does not have to follow the market. And historically, it tends to trend separately from the market, especially the Dow. They're almost opposite. Anywho, we've got yeah. So what's cheap right now? Let's look at some prices here. So let's grab a closing price here. Let's grab the last price here. Let's try to just ignore for a moment the madness of the price changes in the day and just get a look at some of the prices here. BFT has been sitting around 15 for a while. Airbnb 182, certainly not near all-time highs. Certainly feels like it's got some discount, but it hasn't really fallen much. I mean, it's not like if you were investing in Airbnb during this sort of crisis here, you wouldn't have really noticed any difference from the nonsense that has happened with Airbnb, previously, just the ups and downs. Facebook 290. I mean, it's up a little. It's actually doing okay here. It's generally up. Twitter is, certainly not at all-time highs. I mean, look at this. We hit over $80 there, $80.75 for a moment. So yeah, Twitter's kind of joining in the fall there. Not as cheap as it used to be in the 20s. ChargePoint did well. It only ended up 2% today, though, and it's still substantially cheaper than where it was. I really think when we see this Biden push for infrastructure, that's really when we're going to see this potential real movement, especially as we get closer to reality of this infrastructure push. That's when we'll see the blinks, the charge points, and all that really pick up again. Alibaba, nice sort of downtrend here, and it's really been downtrending for a while. I mean, there was a period of time we were really talking about buying Alibaba. Oh, should we get it? It's at the 220s or whatever. We're back at the 220s. It's really incredible. Walgreens has done very well throughout this with this vaccine push. It's been a great recovery play. Really, you could have thrown a dart since the election on almost any kind of recovery play. You've got some nice growth on the recovery plays. Very, very good. Costco, actually, look at this. Costco actually doing decently again here. Netflix, kind of flat, 500. Walmart, AMC kind of stuck there around 10. It's almost like it's trying to trend up here, but a little bit of a recent sell-off drawing question into that as we consolidate here around 10-ish. AT&T is actually over 30, but it's still within that $30 price. It tends to really rubber band around that a lot. GameStop, Apple, things relatively flat over here. 181 for GameStop. I mean, shout out to GameStop. It's really holding. Let's go to the bottom of the chart today. Nordic American, it's not something we'd buy anyway. EXPI at 43, pretty low. This is pretty low. We're getting back to about approximately the pre-split pricing. So what happened here was when they were around $80 a share, which I bought them around $42 a share pre-split. So like most of my money in EXPI, when you look between all my accounts, my basis is probably somewhere around $45, $46 pre-split. And so obviously this has, it's still good, still roughly a double, but it's not some of the insanity that we've seen after the split and then the fizzle following the split here, along with this crash that we've kind of all been experiencing since approximately February 19th. Plug Power, wow, Plug's at $30. That's just so cheap relative to where we used to be. I mean, we are sitting at these December prices here. And I mean, we've been talking about Plug for months, right? This was the stock that just went from like $10 to $20 to $30. But it was really this insane run that has just been eradicated. So it's really one of those things where you look at the market and it's like, wow, this is really incredible how much has just vanished here. Churchill Capital, relatively much the same thing. Open Door kind of had that similar experience as well. Gevo's under $8. We've got NGA. NGA likes to sit over 20, and NGA is at $16.92 right now. It's pretty cheap. Gore's Matterport is $13.25. You got Roblox sitting right around IPO closing day. Canoe, despite reporting earnings today, only up 1% in the after hours, down 5% on the day at $11.80, heading to that $10 range. Doesn't help, obviously, that no news pending on partnerships or buy deals with Amazon or whatever. They might be getting a little too diversified. I don't own any Canoe, but they're definitely trying to hit a lot of different things. We've got, I wonder how Arcimoto is doing. You know, we don't actually even have them on the watch list. We should put them in here. Arcimoto down to 7% today. Arcimoto, wow. Arcimoto down to $13.20 here. This stock ran all the way to a high here of about $36.80. Really incredible. So we are back down to about November, December pricing at Arcimoto here. Yikes. Let's go ahead and add them to watch list, and we'll watch them as well. But really, it's just been the entire EV sector. You can't really isolate this to just one of the vehicle manufacturers. It's all of the EVs are getting destroyed, and even EV-related. Chargers, batteries, materials companies. They're all just getting wrecked. Wrecked. Pretty bad. NIO, flat in the after hours at about $35 right now. We got Palantir, not that Palantir. There we go. Palantir $21.73 in the after hours. It's at $21.63. Pretty cheap. I mean, some of these numbers are just very, very low. So yeah, it's a tough market. All right, let's go ahead and take a listen here just for a moment. Let's see if we got anything we can talk about here. Let's see.
President on down. Not good. Not good.
Okay, so we got Larry Kudlow yelling "not good." Okay. All right. So glad we got that out of the way. And let's now go on over to the Bloomberg TV here. See what they're talking about here.
What happened here was a number of different firms allowed this one individual to lever up on the same names. Did they know what the other prime brokers were doing? It's reasonable to assume probably not until last Wednesday or last Thursday when this became a serious issue, when he was blowing through margin limits and they began to realize that they were going to have to declare him in default. They began to trade notes and realized, oh my goodness, we've levered him up on the same names. You know, if you're Morgan Stanley or Goldman Sachs, and it appears as though those firms have been able to escape this fiasco without any losses, then there isn't a good reason necessarily to change your risk management practices because they worked.
Oh,
because
wow.
you were able to
see that, by the way. Wow. Oh man, like being levered up on the same names, that is exactly what you got to be careful about with these funds, man. Leverage takes these things down. It's the same thing with crypto. You got to be careful.
And
we just don't have the transparency.
Are we going to allow any individual or family office or private investment firm or hedge fund to lever up to this degree? Because we've demonstrated to ourselves that we can't manage it properly.
Hey, Eric, how does one entity build up such a concentrated position in an equity without telling anyone, without notifying
This
anyone?
is a very good question. He was not a hedge fund. He didn't have regulatory reporting obligations. All of the stock was owned or held, let's put it that way, by the prime brokers. They engaged in total return swaps with Bill Hwang. In other words, they agreed that depending on the movement of the stock, he would either owe them money or they would either pay him profits, investment profits, or a share of the investment profits. And so that's how he never had to report anything to the SEC or, for that matter, to any other regulators, and was allowed to amass all of this leverage and a portfolio in the tens of billions of dollars under the radar without leaving hardly a footprint.
God, there's just so many questions here and just so much more. And we've got a lot to get to. But Eric Schatzker, thank you so much, really laying it out so perfectly for us. Bloomberg's editor-at-large, Eric Schatzker, joining us there. All right, we're going to continue our coverage here. Don't go anywhere. Lots more to come, including a conversation with Doug Sifu. He's Virtue Financial CEO. We'll continue.
I like how they say don't go anywhere. Like, does anybody actually really care when they say that? Like, I feel like it's like, okay, guys, please don't click out of the video yet. Well, you know, I won't click away from your video if you actually talk about stuff I care about. You know? I don't know.
In a situation which that is happening around the country because people are just so disillusioned. If the resident does not apply for these dollars, then there is really no recourse for the landlord. And, you know, this is the critical time to get in.
I do plan on breaking down in simple English all this hedge fund crap that happened later today.
That they have the ability to apply for these monies.
40% of rental owners who are owed back rent said they have not received the necessary paperwork from tenants to file for it, according to the National Rental Home Council. 11% said that they have already been forced to sell at least one of their properties. The trouble with landlords selling is that in today's incredibly tight housing market, buyers will likely be the occupants, reducing the stock of desperately needed affordable rental housing. Back to you guys.
Diana, thank you. Up next, PwC out with a new survey that shows some surprising data on how executives are envisioning office life in a post-COVID world. We'll discuss with PwC's Tim Roth.
All right. That's not good, by the way, about the landlords being forced to sell. Honestly, it's counties like LA are to blame for this crap, making landlords take losses on rental relief that Congress is giving. It's a disaster.
Solvency of some banks, which will have to pony up to rescue a large hedge fund that is in liquidation. But I kind of thought banks were in good shape. In fact, smart folks have been telling me it's time to buy banks and financials. And despite a rise in long-term interest rates, we've still got some bond bulls out there. What do you think of that? Buy bonds in front of a giant recovery. Quite interesting. So let's ask our pals, Jim Urio, Managing Director of TJM Institutional Services, one of the great restaurateurs of the Chicago area, and David Bonson, founder of Bonson Managing Partner of Bonson Group. Sorry, got that out. Dave Bonson, there's always something wrong. So I'm just reading these stories.
That's a rough intro, Larry.
Finished. But Credit Suisse and Nomura supposed to be in a lot of trouble because there's hedge funds in liquidation, and you're supposed to run for cover and go away from banks. What's your take on that, Mr. Bonson?
I'm used to my phone and devices blowing up Sunday afternoon with worries about the futures and the market and all the doom and gloom because the market futures are going to be down 1,000 points and all these different things. The market was up 450 points on Friday, was up 100 points today, and I'm getting all the same tweets and alerts as if we were in some kind of a panic mode. It is the weirdest disconnect I've ever seen. It's an isolated hedge fund covering positions in a margin call. There is nothing systemic going on to anyone, and I don't know where this entire narrative is coming from.
Yeah, I mean, Jim Urio, I thought banks were a good play here.
I still think they are. I think the yield curve is steepening and long end rates went up again today. I'm still long. I bought a little more Goldman today. All
right. I don't know. These guys are a little boring. Let's jump back over to Bloomberg. They were a little more, I feel like, educational here.
Issues around how this firm conducted itself in the marketplace. There's a number of U.S. securities laws, Section 13, Section 13G, around disclosure, Section 13F reports, right? Should they be filing these, as a family office? Perhaps they're not legally required to do so. And then
Should they be, in your view, should they be filing that so that there's more transparency?
Yeah, absolutely. I mean, we're all in favor of transparency in the marketplace. And really the substantive difference between something called a hedge fund and something that's a family office, if they're managing over X, $100 million of assets, I think the marketplace is entitled to understand what positions they have and what they're doing. And one of the more interesting things to me, we have this rule in the United States called Section 16, which is intended to limit short swing profits from insiders. And if you own more than 10% of a public company, you're subject to it. I am as a shareholder, as a director and an officer of a public company, I can't just go and buy and sell my stock without the possibility of recapture of profits. And so, obviously the SEC will look at this to see if there was intentional avoidance of our securities law. So it's pretty significant.
I am curious, Doug, though. I mean, we are hearing from some people here who say that basically what was sort of structured, the way these trades were structured, isn't exactly uncommon. Now, they may be uncommon with regards to the scale that we saw at Archegos, but the idea that folks have been using these equity swaps to sort of disguise some of their positioning has started to become a little bit more common. I'm curious as to whether you're A, aware of that, and B, if so, whether you think there is some sort of direct regulatory action that can be done to curb that.
Yeah, I mean, there's nothing unusual about a total return swap. I mean, it sounds dark and nefarious, but it's a common financing / execution tool used by large financial institutions. We don't do it here as Virtu. We act as a broker. We're really just an execution shop, but it's really a way of providing financing and execution capabilities to clients. So there's nothing wrong with that. The issue here is whether they were intentionally avoiding U.S. securities laws, the 13D rules, 13G rules, and then more significantly, the Section 16 rules by, dividing up what they were doing between a number of different prime brokers. Obviously, that's should be illegal, and if it's not, I'm sure the SEC will address that.
So obviously, Doug, the stock that caught everyone's eye was Viacom, which plunged about 50% in the last week, just got destroyed on Friday. What does it say about sort of like market liquidity, market depth, that with no actual real catalyst, the blow up of one investor can send a stock down 50% and no recovery today, down like another 3% today? Nothing changed. It's just one person out of the game and a whole company's valuation gets cut in half. Is that a sign that perhaps there are other sort of like air pockets out there that can't?
That's the big question right here.
Leverage or some big whale in the name?
Yeah, I mean, look, I mean, an air pocket is one thing. I mean, this was just a massive movement because a number of institutions, as the press has reported, wanted to liquidate positions in this name very, very quickly. I mean, nobody would knowingly and willingly, intelligently want to go sell $10 billion of any name. Right. Over the course of a day. So the market reacted the way the market should, which is, hey, is there any information out there, or is this just a forced liquidation and a forced sale? And indeed, that's what it was. So I wouldn't read too much into it, in that regard. And in fact, actually, the marketplace kind of worked because there was, prices all the way through. You might not have liked the prices you got, but the stock certainly, traded and settled and cleared and all those kinds of things. Right. So the market functioned the way it should function. It's obviously very disconcerting because I'm sure there are a number of really unhappy investors who had bought those names over the last couple of weeks that are going to be really, really unhappy when they look at their, they look at their statements from their brokers.
Well, Doug, to that end, is the fallout from this done, or should we be looking out below tomorrow?
No, well, we saw a big tremor on Friday. We saw a little bit, some ripples today. So I would imagine there's probably still some pieces that need to come off the balance sheet. I mean, it would be great, obviously, if there was more transparency around that, so investors would have some idea. But I do think that there'll be some regulatory scrutiny, as there should be, of this situation, again, to see, not that whether the total return swap concept makes sense. Of course it does, but whether or not there should be more transparency and disclosure by, a family office as opposed to a hedge fund, and to make sure that, institutions like this can't effectively circumvent the federal securities laws. It's really kind of dirty pool.
Yeah, a lot of questions that need to be answered. Doug, really appreciate you coming on here to talk about this. Doug Cifu, of course, a co-founder, CEO of Virtu Financial. All right, coming up next, we're going to speak to Nick.
It really seems like there's this disaster loophole of basically a multitude of issues here of basically this hedge fund manager being able to take out way more leverage than he really should have on very concentrated positions that went against him, and he screwed up on a few trades, was way over leveraged. It's not common. This stuff happens. Unfortunately, it's terrible. Do we think this is going to spread? Hopefully not. I'll have a more detailed video later with some of my thoughts on this. I do want to just bring attention to the fact that Li Auto all of a sudden is down about 3.7% in the after hours here. We've got no particular near-term news showing up, at least not on the Webull chart here, but we do see that Li Auto has sold off a bit here in the after hours. It looks like this is a pretty recent sell-off here. I'm not sure if it was spawned by this volatility right here. Almost 1 million shares trading here in just this particular moment, which could have potentially led to some sort of a decline here in Li Auto pricing. So Matterport down about 0.6 in the after hours. Palantir down about a third, almost 2/3 over here at end phase. Tesla is relatively flat, down about 0.1%. At the same time, we do have COS and Arcimoto up 4% for COS, 2% for Arcimoto. EXPI up about 1.3%, and a couple of the chargers and energy companies here doing okay, coming back up about 0.5% to 1%. Let's jump on over to CNBC for a moment, just see if there's any latest info over here. What do we got? An ad?
If you care more about low tax.
Yes, we do. We have an ad. Okay. So we got an ad at CNBC. We got an ad at Bloomberg. And what we got at Kudlow? An ad. Okay. They're all on commercial break. So let's see what the top news might be. All right. Let's see. Top news here. So Suez Canal. Hold on a sec. Let me just see if there's any top news we can cover. Russia. Not really. I honestly, it feels like a very slow news day, with the exception of this hedge fund stuff. You know, we did have an emotional sort of a freak out at the CDC regarding COVID cases and Biden coming out with an emergency announcement. We had more of this sort of hedge fund drama that we got to talk about today. Stay tuned for a more detailed video on that later. Sort of my synthesis of that. We've got ARK X, the ARK Space Fund going public tomorrow. We had, I guess we did have some things happen today. We did have SN10, Starlink, the SpaceX rocket number 10, blow up, and they called that a very successful mission as it blew up on landing. You know what? We could probably, I mean, it might be just worth watching just that little moment there. If y'all want. But I mean, beyond that, I think now the big thing is just going to be sticking to our guns here and hoping that we don't get too much more of a sell-off. Mostly because we've got some pretty good buy the dip prices right now. I think we're all happy with some of the buy prices we have right now. The question right now is really just how low does the dip keep going, right? So take a peek here if you haven't seen this yet. We'll watch it together here really quick. This is a replay. This has already happened. So this is, this is SN8. Hold on a sec. Where's SN10? I thought it was 11. Was it 11? That was a while back. SN10. Oh, okay. It's okay. Then maybe I watched an old video. No, never mind. So then maybe that wasn't even. I thought we had a launch today. You know what? It may have been Elon Musk's tweet yesterday that it's no, streamed 5 hours ago. Oh. Scrubbed? Oh, it got scrubbed. Never mind. It'll be tomorrow. Sorry, my bad. My bad. I screwed up. They somebody, you know what? This is what happens. I was reading news about the SN10 blowing up, and the SN11. That's what's launching. That's my fault. And that got scrubbed. So that's my fault. So this got scrubbed. Happening tomorrow. Looks like it was a pretty weather intense day over here anyway. So correction, SN11 has not launched yet. So we'll see that tomorrow. Hey, if we're live during that time, we'll play that moment there. So sorry about that. But yeah, I mean, otherwise, seriously, it does feel a little bit low newsy. And we'll see what happens. Bond yields did tick up a little bit. You know, we went to like just a little over 1.7. And clip this, Kevin predicted tomorrow's low. No, I hope it doesn't blow up, right? I mean, we know it's just testing. And they're trying to blow these things up to push everything to the extreme. I mean, they've all blown up so far, so it's not like it's a big surprise. But yeah, anywho, we will see. We'll see what happens tomorrow. Eventually, these will just consistently not blow up, and that'll be really cool. We can take a brief peek here at CNBC. Let's see if they got anything.
No such thing as a free launch. Get it?
Okay, well, that's kind of what are they talking about? The same thing as we're going to talk about. All right, or they're talking about ARK X tomorrow, but we can talk about that separately. So anyway, there we have it for today. Yeah, SN10, it landed, but then it blew up like 5 or 10 minutes later. I think it was between 5 and 10 minutes later because I watched like 3 or 4 minutes. And I'm like, it's got to blow up because I was watching with Jack. I'm like, it's got to blow up. And we turned off the video and then it blew up. So, yeah. But anyway, so, all right. Yeah, I think that's about it. Any last questions? I suppose I can, let's see here. Any other last questions here? No. No. Okay. Well, we'll see what happens tomorrow. Appreciate y'all being here. We'll see y'all. Yeah, no news. Exactly. We'll see y'all on the next one. All right.